Welcome to Commodity Analysis on Thursday, the 19th of September 2013. And last night saw the Fed's announcement about current QE policy, and we've seen a surge on the back of that. Initial sharp spike for the emini S&P. But what are we looking at here? We're looking at the dollar yen. It's a really interesting chart, and I rarely cover the currencies for you guys on this free video, but it's not something that we take our eyes off. Dollar yen is, I think, of all the currencies, the most technical. What I want to show you about this, though, isn't anything to do with the actual currency pair itself. It's to do with price action. Look at that. Okay, we're trading the horizontals here. Look at these pivots that are formed in and around this big median line. This is a historic median line. I'm not going to go out any further. And all we've done here is we have, look at this supporting mauve. Can you see my cursor as I move along this mauve line here? There's another horizontal. This is, these are high probability areas. And let's just have a look at this big black line here. We're going to go down from the 240 minute in dollar yen. We're going to go, and there we are. We're back on this line, and it supported price. We had a couple of good trades for those subscribers who remember last week. Here, this touch here, which may look nothing, but it was a beautiful. Let's have a look again. See if we can take you back and show you how price in and around this line. And these manual drawn trend lines are just. In fact, we'll get rid of that just so I don't confuse anyone. Delete, and you can see price action, then the gap through here on this downsloping, the confluence of these three lines here. Price fell away sharply. This was on the back of the announcement last night, and now look at it today. All those gains, all those losses have been parred, and we're now 99.28. Obviously, we're going to, I suggest you see price pivot around this line, and perhaps this follows a pattern which I've seen many times before. We'll expect to see price rally from here, so we're firmly bullish of dollar yen, and if you were lucky enough to have a look at this area here last night, let's move on anyway. Remember, these are possibly one of the most important parts of our course, these horizontal median lines, these horizontal historical median lines from the monthly time frame. And let's now go and have a look at gold again, because again I was talking to you, and if you looked at the video, yesterday's video, you can see where this line is here. There it is, and again we can't move these, they automatically go back, as you just saw then. We saw a break over there. We've got a small gap there which may have to be filled, but at the moment I certainly wouldn't want to buy into gold at 1368. But I did say yesterday, and it's the first time we've looked at gold for a long time, and I notice now a lot of the big technical departments of banks are all talking about gold going down to 900, 1,000, 1,100 bucks. I'm beginning to wonder. I think we may have turned the corner. It's a possibility. We're going to watch it. We're going to watch it, and certainly we'd like to see this period of consolidation broken out from. We'd like to see price again back up towards the 1450s, and take out this little area here around 1500. Then we'll be on our way up again. But it's certainly something we need to watch. Let's go back to the mini S&P, and I just want to show you this. Have a look at this. You often see with reaction lines what appears to be a reaction behind the line. And I just want to isolate. I know this looks incredibly complicated in the 240 minute. Let's just go down and have a look. I've just drawn over it manually in the 240 minute. Okay, there you go. I'm going to do it again for you, just so you guys can see this. This is important. I've just taken a manual trend line. These are all drawn using the indicator. Okay, all of these lines are automatically drawn. Let's make it my color for, there we go. It's a solid line, and it lies bang on the axis of this upsloping reaction line. Okay, now we drop down to the 60 minute, and hey presto, There's the manually drawn trend line. Here is the reaction line from the particular fork in question. Now we're going to drop down again, but I'm going to draw this line again over the position, the location in this 60-minute time frame of that reaction line. Now down to the 30, and hey presto, it's moved again. Now we have the reaction line sitting in the middle, and this is the concept of mirror lines. Anyone who's taken the course shows you how to use these to great effect. Okay, so now we have three. These actually should be, and if we were doing this more in a more fastidious way, in a slightly more careful way, these should be equidistant. Hence the fat mirror line. Let's go down to the 15-minute, and again, and now we're seeing the correlation with price. All of these lines are viable. They all show correlation with price, and I'm going to show you by dropping down. There we are. Now we're bang on, and again I can't move this. If I wanted to, it should flip back as soon as we get a tick, and let's refresh the chart. Back it goes. Okay, down to the 5, and here we can see the correlation with price. We can see correlation with price on the outer line. We can see correlation with price on this line here, the manually drawn line, and you can see some interaction with price. There's not much going on there, but trust me, it's you know. And you can also see this automatically drawn line here. If we refresh that, back it goes. Again, showing support and resistance. Just shows you how important these are. The fabric of price. This is the matrix that. Let's just refresh that, because there we go. This is, I believe, the matrix that price moves through, and we're maybe looking at less than a fraction of 1% of the matrix. We're trying to draw only the most important lines. You can see everywhere. I mean, don't expect these lines to work, you know, for price to come up, touch a line, and you have to understand price distribution. And now I've gone and look at that. I've gone and there we go. Let's just leave that. Let's deselect all, and you can see all of these lines are valid. Even this little horizontal here, that's valid. You can see. You can. It's incredible to see how these head and there's a classic little pattern, a mini head and shoulders. Left shoulder here, touch on this upper reaction line. There's the top of the head, second shoulder, and drop away. All of these patterns make sense, and we can fill in. This is a quite a simple chart at the moment, and there again, let's move that up there, and you can see. Anyway, I just wanted to show you that. So let's move off from and ask back onto a slightly cleaner emini S&P chart, showing today on the 19th, pre-Wall Street opening. What's going on? What's going on here? Look, the markets, you know. There's another classic reaction line. Let's just isolate and have a closer look at that. There's a whole band of these reaction lines coming up, and I'm going to show you by going into the daily. You can't really see it there, but look, I'll show you another chart in a minute. You can see there, classic effect. Let's go down, and again, and again, and there is one of the resisting reaction lines. But where's price going? Well, you know, it's firmly on the way up. No one wants to stand in front of something like this. And when the time comes, and we will see a retracement at some point, I guess back to 1700 area and fill this gap from Sunday night and last night's mini gap. You can't really see it in the 240 minute, but there's a small gap there. That will have to be filled as well. But I guess we'll have a period of consolidation and further gains. You can see there's another reaction line up there. And all of these, you can look how that median line has resisted price, and again it will support price. Again, this one here, this thin blue, look at that, beautiful correlation with price. All of these are opportunities. This is one that we were looking at this morning with a group. This is an upsloping reaction line. We've seen it work here. Let's go down to the 15 minute and just show you. We've seen it work here. We've seen a dip through yesterday. The horizontals are always the ones to watch. These have the highest probability of supporting or resisting price. Horizontal lines from historical median lines, historical pitchforks, are what we're interested in. identifying these zones, these areas in a place in time and price. Again, same fork, you can see here, reaction line, price is heading, we believe, for this group, this cluster around here, somewhere around the 1760s, and by which time I guess we'll be up around here, 1750, 1760, and then I think that you can see it slightly clearer in that in this study. And there's that band I was saying of all these downs. So let's go to the 60-minute. Look at that. Oof. Ooh, look at that. That's going to cause a lot. Look at price in this band. These are quite widely spaced, and we can go down and we can isolate and look at individual price action around each of these lines. Again, we could just shoot through the whole lot, but I guess, see, support, there's this one. It's going to be an interesting journey, and I hope you'll check back tomorrow and have a look at our next reaction line analysis of the emini S&P and other interesting markets. Thanks for joining me now. Bye.